I'm going to show you the strategy that I personally used on Palantir, which is called the wheel strategy with options, which helped me retire early. I'm gonna walk you step by step exactly how I choose companies to trade. I'm gonna show you how I executed this wheel option strategy on Palantir, and I'm even going to show you how I replicated this every month. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I personally am doing for educational purposes only. Results may vary, but let's go ahead and log into the portfolio. Remember, if you do want to subscribe to the channel and watch me, reach my 8-figure goal, do that below. The subscribe button's right down there. But let's go ahead and get into the realized gain and loss. I do want to show you how this has worked out for me. So as you can see, year to date, and we're going to load this up. We're just going to press refresh there. This is my total net gain utilizing this exact strategy. So let's go ahead and get into it. But before we dive into it, if you do want to learn how to trade options and you want to join me and 230 other high-level traders and investors in my mastermind, that'll be at the top of the description. You could watch this free training right here and even some of our client testimonials. Also, I do give away free trade ideas here on my Instagram and my free newsletter, which are also both down in the description. So make sure to check those out after the video. But let's go ahead and jump into it, okay? First, we're gonna talk about the 3 criteria for the wheel strategy, and then I'm gonna dive into the ins and outs of exactly how it works, okay? So number 1, we have to choose a stock that has a great chart, because it's very hard to trade the wheel strategy, which is mostly bullish, neutral to bullish. We want to make sure that the stock is easy to trade, and that if there's ever a crash or a recession or anything like that, that the stock will recover and go back to new all-time highs. So Palantir is a great stock to do that on, because as you could see, we had the 5th fastest stock market crash back in April of 2025. So by the time you're watching this, depending on when, could be a long time from now, could be, a couple months from now. But as you see, 5th fastest stock market crash, Palantir came down, but then as the stock market recovered, we are trading at all-time highs, new all-time highs here on Palantir, and QQQ, the NASDAQ 100, just recently hit all-time highs. So this stock is outperforming the NASDAQ, and as you can see, long-term, this stock is upward trending. So this is a great chart and would meet the criteria for a stock that we could do the wheel strategy on, okay? So that's why I chose Palantir. Great chart. Number 2 is great valuation. So we want to make sure they have a good PE ratio. If they don't, okay, like maybe the PE ratio is high, we don't trade stocks with negative PE ratios. We want companies that have proven themselves, that have earned a profit, right? But if the PE ratio is high, then we'll look at cash on hand and we'll look at catalysts that could potentially make this company grow in the future. So when we look at Palantir, all right, first thing we see, PE ratio is 570, meaning investors are paying 570 times what they actually earn to own the stock. So this is a very, very high PE ratio. We like to see PE ratios, especially on tech companies, below 100, okay? So this is very, very high. So the next thing I'm going to look at is I'm gonna look at their cash on hand. I wanna make sure they're able to weather a storm and a recession. All right, now we could see that their cash and equivalents just last quarter was $1 billion. Their debts are $244 million. So they're able to cover their debts about 4 times over. That's a very good sign. They can weather a storm and they'll be fine during a crash or recession, as proven with this last crash, okay? Net profit margins, 24% last quarter, wonderful, okay? So we just wanna make sure they're earning a nice profit margin and they have cash on hand to cover their debts. So this company would suffice, all right? So Palantir is great on that front. Also, the catalyst that can drive the company forward is they have many government contracts. They literally they're the largest supplier of AI software for the military, okay? And they also have a lot of commercial businesses that have partnered with them, like AT&T, Wendy's, Walgreens, right? Tons of different companies, as you can see on their YouTube channel, which I like looking at because they invite their partnerships onto the channel to talk about how AI technology and Palantir software has changed the business, right? Citigroup, Hertz car rentals, right? They have many contracts with many commercial businesses, and not only NATO, but also the US government and military. Okay, so Palantir has a lot of catalysts going forward, especially with this Golden Dome. President Trump does want to fund 175 billion over 10 years to build the largest military missile defense system, basically a Golden Dome over the US. And Palantir will be a receiver of those funds because they are going to help build this out. So another big catalyst for the future. All right. This stock is currently a $300 billion market cap. I believe this could be a $1 trillion company. So I'm playing it for the long term, and that's what works well with the wheel strategy. All right. So great valuations, great chart meets those two, and then great premium. So now let's talk about how the wheel works. The wheel works by, number one, we're going to be selling cash secured puts. Okay. What that is basically stock insurance. We're selling a option down here. The stock's trading up here. If the stock doesn't go below that strike price, okay, then we keep our premium and we do it all over again the next month. Let's just say in 3 months, okay, we sell a put strike right here, a put option, the stock's trading here, and then it goes below our strike, right? We will be forced to buy 100 shares of that stock at a discount, and we still get paid a premium. So I'll get paid a premium to buy a stock at a discount, specifically Palantir. So that's why I love this strategy. It allows me to dollar cost average into my favorite stocks and get paid to do so. So we sell puts, get assigned, and then we sell covered calls against our shares. So I will go ahead and sell a call option against my 100 shares, collect income. And when the stock goes above that call option, I will be forced to sell my shares at a profit, and then I will also collect that covered call premium. Okay, so sell puts, get assigned the shares, sell calls, stocks get called away, and then we restart this whole process over again. Don't worry, I'll get into the nitty gritty of how this works in just a moment. So let's go ahead and first, before we even get started, talk about the VIX, the Fear and Volatility Index. I want to talk to you about this because this is something I look at when trading options. I want to make sure that I'm not always 100% invested in the markets into options because I want cash when, the market does downturn, when we have a nice little crash or a pullback. I want to make sure I have cash on hand to take advantage of that opportunity. And how do you know when the market is going to downturn or a stock is going to go down? Well, you're going to look at the Fear and Volatility Index. When there's no fear in the market, when the VIX is at 10 to 12, okay, I'm usually 20% allocated and I have 80% cash, all right? And that means there's zero fear in the market, all greed, and it just takes one bad piece of news to make the market downturn, okay? So let's go ahead and look at the VIX right now. We are currently trading at a VIX of 1663, okay? So there's still a little bit of fear in the market, right? We're not at VIX down here where, let's just kind of look at the last time we were at a low VIX, meaning, right here, the VIX was at 1460. This was February 14th, 2025, okay? Now, I want you to look at Palantir. What happened on that day? So February 14th, 2025, Palantir was running to record all-time highs. We're overextended on the RSI. As you can see, we're overbought. As far as PE ratio was the highest, all-time highest, overvalued, right? And then 2 days later, the market crashed and Palantir crashed as well. So that could easily be seen because VIX was at a, all-time low for the year for 2025. And of course, VIX spiked, fear went up, the market crashed, and Palantir went down. So we have to be cognizant of how much cash we have on hand. So for me personally, okay, I'll take a look at the VIX. We're between 15 and 20. So I could have 60 to 80% of my cash allocated, meaning I have positions on, and maybe I have 20 to 40% in cash. Right now, I'm really aggressive. I have about 13% in cash, okay? So I'm definitely more aggressive, but there's still elevated levels of fear, and that's fine. I know the risk that I have, but at least I have some cash available to take advantage of any downturn. So that's a quick, disclaimer, a quick thing I wanted to show you so that you can understand how do I manage my capital efficiently, okay? The best hedge for a stock market crash is to have cash, and you can, follow these levels and get an idea of how much cash, should be in the portfolio. All right, so that's that. Let's go ahead and jump into the cash secured puts. All right, so this is how a cash secured put works. Basically, let's just say the stock is trading up here. It's trading at $100. Okay, the stock price is $100. We're going to sell a cash secured put, which is like, think of it like stock insurance. Okay, we're going to sell one at the $80 mark. So why would anyone buy that put option from us? Well, maybe they own this stock. They bought this stock at $20. Okay, stock's trading at 100. They want to make sure to lock in profits if in the event the stock goes down. Maybe they say, hey, if the stock goes down to 80, I want to just be able to get out of my shares and not lose any more of my profits, okay? And we'll be forced to buy those shares from them, all right? So it's basically like, think of it like car insurance. We pay for car insurance every single month. When's the last time you used it? Probably not in a long time, or if ever, right? But we continue to pay it, and we'll probably pay car insurance enough to buy 2 or 3 cars in our entire lifetime. It's exactly what we're doing here. We're selling expensive stock insurance, okay? Which allows us to get stocks at discounts, and it allows me to collect premium every single month. So again, stock's trading at 100. We'll sell this $80 put. I'll go ahead and sell that, collect $500. And then let's just say in 30 days, the stock's trading at 99 or 92, okay, above my 80 strike. The put expires worthless. I keep that whole $500 in premium. I do it again the next month, okay? The next month, the stock trades all the way down to 83. That's fine. It's still above my 80 strike. The put expires worthless. I collect my $500 and I do it all over again. And then let's just say the third month, the stock goes down to 75. Well, now I'll be forced to buy 100 shares at 80. And, okay, I got paid a premium to do so. So that's how the short put, the cash secured put works, all right? So what I like to do is sell a 20 to 30 delta cash secured put, depending on how bullish I am. That means what's the 20 delta is it has a 20% chance of the stock going below it, so in the money. So an 80% chance of expiring worthless, right? So it has a high probability of expiring worthless, but you get paid a little less, versus a 30 delta has a 30% chance of the stock going below that strike price, but you get paid a little bit more, okay? So I like to sell usually a 30 delta, be a little bit more aggressive. I go 30 days out to expiration for monthly income, okay? And then I enter on red days preferably. When the stock goes down, those put options get more expensive. You're able to get further away from the stock. I like to enter on red days preferably, but not always, okay? And then also lastly, if I collect 80% of the premium in the first 10 days and I have 20 days left on the trade, sometimes I'll close it out at an early profit, okay? So that is exactly how the cash secured put works. Let's go ahead and dive into the account. Remember, this is not financial advice, just sharing what I'm personally doing for educational purposes. Results may vary, but let's go ahead and look at it. As you can see, I'm here in Thinkorswim, okay? I'm just gonna go to my Palantir position right now, and you could see I have the 125 put options. So if I go to the chart, all right, of Palantir, you could see that I sold the put option all the way down here at 125, okay? From right now, the stock would have to go down an additional 5% by expiration for me to get assigned those shares. So I'm pretty far away from the stock right now. I actually sold those 125 puts right here when the stock was trading at 145, okay? So it was much further away and the stock is coming closer towards me. But at the time, that was 13% away. Now it's about 5% away, okay? Which is totally fine. It's still far away from where my puts are. And most likely those will expire worthless. So I have those 125s. But if I were to enter a cash secured put today, I would go to the option chain. I'd go to August 1st, 30 days out, okay? And there's a few columns here, okay? There's the strike prices. All right, there's the delta column, which remember I'm trying to sell a 30 delta option, okay? And then we have risk, return on risk, this ROR column, which will show you the return on capital for that specific put option. So if I sell the 30 delta, which happens to be the 124 strike, okay, I'll collect this much money, all right? And that's this percent return on capital in this amount of time. So in 30 days, all right, that will be the return right here. So, that's a pretty sizable return. If I did that every single month, right, that would be pretty sizable. And that's essentially what I'm doing in the account. And that's exactly how I'm able to achieve those results, all right? So this would be the strike price I would select. I would press this right here, okay? Sell 1, August 1st, 124 put. I would collect this much, review and send, and then boom, entered that trade, okay? So that's exactly how I would do the cash secured put. Now, let's just say we do that for, 2 more months and we're collecting that return. Well, eventually we're gonna get assigned those shares. Let's just say Palantir comes down, right? It comes down and it just goes down, okay? Maybe it goes down to 117 and kind of rebounds from there. But now I'll have to buy those shares at 124, the cash secured put that I sold, right? So now I just have shares. I have 100 shares. What do I do with them? How do I collect income? Well, now what I'm going to do is I'm going to sell covered calls against those shares. All right, so let's just imagine today we got assigned at 132. All right, we sold the 132 strike and today we got assigned 100 shares at 132. All right, what I would do is then, okay, actually let's go to the covered calls, okay? I would sell a 30 delta covered call. I would go 20 to 30 days out to expiration for, partial monthly income. It's most likely you're going to be in 20 days, so 3 weeks. All right. Enter on a green day. And then usually I just let these go until expiration. Okay. I either let my shares get called away or I enter a new covered call position by expiration. So what I would do is go to like July 25th, 23 days out. Okay. And I would go to the 30 delta, which would be, the 143 strike, okay? So, I'm gonna collect this much, all right? Which is a decent amount, okay? It's definitely a smaller return. It's, probably somewhere around 2%, right? Which is still great, but also I'm gonna get appreciation from 132 all the way to 143. So that's a $11 appreciation per share times 100, right? Because I have 100 shares. So that would be a great, if the stock goes all the way past that, I collect this and I collect the profit from selling my shares that I bought at 132 all the way to 143, okay? So you could see that the return will be bigger than on the cash secured put side. The total return will probably be somewhere, for me, and obviously it's not guaranteed, these numbers change, but it'll probably be somewhere around 7 to 10%, okay, on the covered call side. So that's exactly how to do the covered call, all right? Love doing that. That's the other side of the wheel. And then eventually shares get called away and then we do the cash secured puts again. But how am I able to maximize my gains, okay? How am I able to supercharge my gains? Well, one thing that I do is I implement leaps options. Now, leaps options are not part of the wheel strategy. The wheel strategy is primarily selling options, which is beneficial, right? Every day that goes by, time is working in your favor. Buying options, every day that goes by, time is not working in your favor, so you need the stock to go up, right? So what I do is I'll buy a 70 delta leaps call option 1 year out, sometimes 2 years out, and the rule of thumb is stock has to be below middle Bollinger Band or close to the lower Bollinger Band. And then VIX also has to be above 15. So let me show you Palantir. This is exactly actually what I did, okay? I have a leaps call option right here, Jan 15th, 2027. So 562 days from now, 120 call option. And I'm already up on these, okay? But I'll probably hold them until I'm up 20 to 40%. Okay, I paid this much. All right, so they costed me money. I didn't get paid a premium. I paid a premium to own these, right? It's like controlling 100 shares per contract. But I did it at a specific time. So these right here are called Bollinger Bands. Now, I love Bollinger Bands because it's a statistical indicator that shows you 95% of the time, or 2 standard deviations. These lines are 2 standard deviations away from the average price, or what that means in layman's term is the stock is going to stay in between these 2 lines 95% of the time. And every time it breaks out, as you can see, it sucks back in, okay? It reverts back to the mean, as they call it, okay? Every time it breaks out on the upside, goes back inside, right? Goes back down. So every time Palantir has broken the lower Bollinger Band, it's gone up, all right? Every single time. And that's kind of what I see right here, all right? If we take a look, we're just gonna erase this one, okay? But as you can see, we've broken below this middle Bollinger Band line and we're near the lower Bollinger Band. So what I did was I entered a Leaps call option here and I'll ride it until the stock goes back up to near this upper Bollinger Band. So when Palantir gets somewhere between 144 and 147, right, that would be a good exit point because the stock, when it's at the upper Bollinger Band, tends to go back down, okay? So I'll ride it for that. But that is a good way for me to like maximize the returns is by buying the Leaps options. Now, I only use 10% of my portfolio to buy Leaps call options. 90% of my portfolio is selling options because I want time to work in my favor. I don't want to be paying money for something that is losing value every single day, okay? For instance, if we go, I want to show you how it works. I'm just going to go out to Jan 15, 2027. These are the ones that I bought, right? Paid this much. And every single day, the theta, okay, theta decay, meaning the amount of dollars that are decaying out of this option is $3.41, as you could see, okay? But some people, they like to play these shorter term options, like 44 days out. We'll go to that same strike. You could see that the theta decay is $13 per day. So 4 times more. They're decaying 4 times faster than the ones way out here. Of course, you have to pay more money for these, right? I have to pay a higher premium, but I get less theta decay. So that's why I go out so far on time, because I give myself enough time to be right, okay? So this is exactly how I'm able to generate a great income and great returns from the wheel strategy. Obviously, there's risk involved, but I like the company. I've done my research, right? And it's worked very well for me. So if you like this video, make sure to give it a thumbs up, be subscribed, and I'll see you in the next one. I'll link another video right here that you could watch, and take care.